Hi there, welcome back to another weekend update for February the 27th, and it's been a pretty interesting week with what's been going on in Libya and other places in the Middle East. I was expecting a more significant reaction from the market to the downside, but what happened on Friday night may be indicative that this correction may have run its course. I'm not sure on that, and I've got some targets that will tell us whether that's the case or not. But certainly I think I'm seeing enough evidence now to suggest that if there is any more to happen in the correction, it's not going to disturb markets too much. So initially we'll just check the important information. So there's our important licensing information. This is general advice only. So a bit of a market status summary. The S&P went higher on Friday night, and the question is it just part of the normal ABC correction pattern, and we're going to see some lower prices, or is in fact the correction finished? So we'll have a look at that chart in just a minute. The bullish percent index chart is more overbought than I've seen it in the past. It did certainly pull back a little bit on the latter part of the week, but because of the very positive action on Friday night, did actually turn back up again. So certainly the US market looking pretty resilient. We'll have a look at the US dollar and bonds, and to my mind they're still supporting the medium-term move higher in the stock market. When it comes to the Aussie indexes, the ASX 200 is obviously not performing as well as the US. It's still within its uptrending channel, but certainly did pull back pretty hard in the early to middle part of last week. The Small Ordinaries Index is struggling a little, but from an index point of view. But what I did see, as I made note in the small cap alerts this weekend, going through several hundred charts of small cap stocks on my secondary watch list, was just how many breakouts occurred in the last 2 or 3 weeks, and even in the last week, on some pretty strong volume. So normally when sentiment is turning against the small caps, it turns pretty savagely and the volume just dries up. And when I run a scan, I hardly get anything coming up. I'm still running scans and getting 30, 40 stocks that are meeting the criteria for the scan that I'm running. So that tells me that sentiment hasn't really turned negative against the small cap sector at all. It's still a lot of buying and a lot of stocks still moving. So that's pretty encouraging. And in commodities, copper rebounded on Friday night, which was good. It certainly needs to hold above $4.20 for us to maintain this very positive momentum. But it did rebound, I think, to about 440, 445, something of that area. And of course, precious metals, and in particular silver, is very strong. So let's have a look at some price charts. So the first one I want to take a look at is this all-important US Treasury bonds. This is the 10-year bonds. So you can see bigger picture, they're in decline, and the whole bond market is, after several decades of rising, it is in decline now. So that decline started really back here in October, November of last year. We're just getting a little bit of a counter-trend rally at the moment, and because bond yields are rising, that means that the actual interest rates are falling. And you've seen this chart before, which is the 30-year Treasury bonds. We've got a danger level up here just under 5%, where you could certainly envisage money starting to come out of the equities market, looking for a lower risk investment that's perhaps offering a similar kind of return. But markets have turned down again. Interest rates have started falling. I think this is only temporary. On the longer term, interest rates are heading higher, and I believe in the US, interest rates are heading way higher. because the government is just not going to be able to source money at the current rates that they are. But this is positive for the market in the short term. So let's have a look at the SPY, the S&P 500 index. So you can see we've still got this very steep inclined channel. And I'll just tighten in on there. So what I'm looking for is for a minimum of a retracement to this first level. So this level here, I'll just remove this bigger one to make this clearer. So this retracement structure is from the low in November. The last time we got a little bit of a pullback, which lasted from the 5th of November to the 30th of November. So about 3.5 weeks was the last pullback. And that's why I'm just a little bit cautious that this one has actually played out yet, because we've only had a few days down. So the first level down is 1276, and of course it's also been observing the 50-day moving average, which at the moment is at about 1285. So what I'm still expecting as the high probability event is that we will get an A, B, and then a C pattern down to here, and that would complete a pretty mild correction. If that took a couple of weeks, then that would be good from a time span point of view, and it would really remove the overhang of sellers and profit takers in the market, and that would be very healthy for the market. That may or may not occur, so I'll just take those off again. That may not occur, and the proof would be, for me, if we close above 1325, and it's possible we could do that because it's come down, it's tried to break through the 1300 level and the bottom of that channel, but was rebounded from it, closed above it, and then we had quite a strong turnaround again on Friday night. Now if we just look at a retracement of this very short-term move from there to there, then we get 1325 as the third retracement level. So if this goes back and closes through 1325, then I believe that we're probably not going to see this head down any further. So for me, that's the key line in the sand, 325, a close above there on the S&P. We closed on Friday night at 1320, so it's only another 5 points. So above that, and particularly if it does it fairly quickly, I think would be a sign that this correction is probably finished and we're heading higher. So I think we'll know for sure in the next couple of days. Let's have a look at the Australian market. And also still in inclined uptrend. We've pulled back to close to the bottom of the range, but down around about 47.75, 47.80 would be the bottom of the range. And it's still possible that we're still heading for 5,000 and above to the top of that trading channel in the short to medium term if the US market turned around straight away. Now when it comes to the Small Ordinaries Index, you can see we had an extremely strong uptrend happening. Basically through there, which we've now broken and started heading sideways. We have retraced to this first level here, so the move from the 24th of November. We're now into a sideways move. We had 4 lower closes in the early part of last week and a little bit of a turnaround on Friday. But as I said, with numerous small cap stocks still breaking out, I'm still pretty comfortable with exposure to the small cap area. Okay, so let's have a look at some of the other metals charts, and here's the price of tin, and it's just backed off a little bit in the last few days, but still very strong above 32,000. So no changes there. The copper inventory level was pretty much unchanged from last week. You can see we have had a move back up, so a partial retracement of this particular run down. And as a result, we eventually got this bit of a decline in the copper price, but it did rebound on Friday night, as you can see there. Let's have a look at nickel. The nickel inventory started turning up again much earlier than copper, but has again gone into drawdown phase. So that's supportive of the nickel price, which has been rising quite well. So we'll go back and have a look at some other charts, but the opportunities this week, I'm getting a little more comfortable that the small caps are not going to get smashed by a big shift in sentiment. So there's the possibility that you may want to just start to ease your exposure back up again. So I think some judicious buying is okay, and there's a couple of opportunities in the small cap alerts this weekend that are non-direct commodity stocks, which I think will be just a little bit more insulated if commodity prices do come off any further. So the suggestion at the moment remains at around about 50% of maximum, but some traders may decide to go to 60 or 70 based on your own risk profile. So I'll leave you to decide that. But certainly I am more comfortable with the small caps now than I was a week ago, because going into a correction, most of the time the small caps do encounter some fairly heavy selling, and we did see that for a day or two, but it seems to have gone now, so that's fairly positive. I'll just reiterate the alternatives on silver, because I think silver is probably one of the best investments of the next several years. So we've got several alternatives. You can trade silver directly through several of the CFD providers. So that's the code on CMC for the silver price in US dollars. There is an exchange traded fund which basically directly tracks the price of silver in Australia. It's not very liquid though, so you need to be, anything you do in that area needs to be really a longer term proposition. You want to be thinking about that as an investment for several years. Silver, and just a point on that too, there are some things that I'm reading of late that suggest that some of these exchange traded funds may not actually be holding the silver and gold that they're supposed to according to their charter. So that's just something to consider if you're going to be a long-term holder in gold and silver and exchange traded funds, that you just need to be aware that there may come a day where they may not necessarily be honoured. So I think they're okay for a medium-term trading vehicle, but maybe there are better alternatives in the longer term, or basically you just trade them and don't treat them like an investment. Now we've also got a couple of silver developers in Australia. We've got, in terms of pure silver developers, we've got Cobar Consolidated and Alcyone Resources, and we've got Silver Wheaton in Canada. Now, large cap trades, there's a couple of options there in the alerts. So basically, as per what we've got there at the moment. So let's just have a look at a few more charts. We'll have a look at gold in US dollars. You can see long-term trend is still absolutely intact. Price currently well above the 150-day moving average, getting up and starting to challenge the triple tops that we've got up here at about 1420 to 1430, and a breakthrough there is going to see gold really motor higher fairly quickly, I believe. Let's have a look at silver. And silver has already broken out above its highs, so it's in big catch-up mode with gold. So you can see silver is just absolutely taken off from under $20 back in August and now it closed just around about the $33 mark on Friday night. So that's a very, very strong trend in silver. Look at copper, and you see copper rebounded quite strongly. So we broke these short-term highs from early January and mid-January. We broke those fairly decisively with a big gap down on Tuesday night, but it's reversed it and gone back up, and the volume was very strong as well. So that's a very positive sign for copper. It's not surprising to see it basically back up challenging this support resistance level, but to do it in one session and to do it on big volume is pretty positive. So we'll just take a look at one or two of the options in the alerts. So this is Mermaid Marine, which is a very high quality resource services company, basically in the oil and gas industry, with provision of tugboat services and marine services up to the Northwest Shelf. You can see we had quite a strong resistance level up here that had been tested several times, once here, twice, the second time in January of 2010, and then it's basically been sitting around that level now for quite a number of weeks. We've got a break above it and a couple of retraces back into the range, back to the 50-day moving average. But looking at the fundamentals, I think this is a stock that's going to continue to move higher, and we're seeing the 50-day moving average starting to pick up. So I think this is a good one in terms of it won't be it's not the sort of stock that's going to double over the next 6 months, but equally it's probably not going to go down very much as well. So I think for more conservative traders that perhaps happy with a smaller return but with much lower risk, then this is a pretty good stock that fulfills that need. And we'll also take a look at another stock that I've been watching for several weeks. It's in the biotech area, called Prima Biomed, and I've been noticing of late that a number of biotech stocks are starting to gain some momentum. So Prima, if we wind right back, has got some all-time highs up here above 60 cents. Went into a very steep decline that took it down to about 1 cent only less than 2 years ago. Now, as you can see, we started to get some volume kicking in here. This was April 09. We had an initial spike up to about 20, closing price of 26. It backed off again, came back down to 9 cents. So these small stocks can be extremely volatile. And now the volume has really started to come in again, basically since about the middle of December. So you can see a strong rise from about 11 cents, and we're now trading at 26, and some good consistency in volume here. That had gone quiet again. I was hoping to get in around about the either 19 or 20 cent mark. The price almost made it back there, but not quite. But you can see on Friday, good move on big volume. That was nearly 6 times the amount of volume that had previously been going through. So that's pretty positive. It may run into some resistance here at the level it's at now and just pull back a little bit, but that looks like a pretty good break to me. So that's pretty much all I wanted to cover this weekend. All the rest of the material is in the alerts. I think the main message is that the turnaround in the US market on Friday night does not necessarily indicate that the correction's over, but I think it certainly does indicate that this correction is only going to be mild if it does find some lower levels. So I remain pretty comfortable with the market for the medium term, and if you wish, you may want to just start to ease your exposure back up a little bit. So that's all for this week. We'll talk to you next weekend. Cheers.